Welcome to the Black Phoenix Financial Podcast. Lee Kemp here for another week of financial education, as always with Ethan Cope. How are you this week, my friend?
Good, very good. Very excited to be with you guys today.
Excellent stuff. We thank everyone for joining us over the holiday period. This going out on what is New Year's Eve. So hope everyone's having a good day and down for getting a bit of financial education going on as well. So what are we talking about this week to start us off then, Ethan?
Well, we're actually going to be discussing the long-awaited topic of short selling.
Yes.
And I know that was something that Lee was talking about. And on the heels of our last show where we talked all about play and practice and how the conditioning in the market is very similar to a video game because it's not intelligence for the most part. Some of these things we have to learn for sure, but there's so much emotional conditioning. So learning short selling is super exciting because it's actually my favorite simulations to run. And if you take simulations seriously, it's exciting when you're winning, and you're like, oh man, when I'm losing, you're down in the dumps a little bit if you're taking it seriously. So short selling is the opposite side of volatility. We've been talking about going long for a long time, and that means buying with the idea of selling at a higher price, and the difference between the price you purchased at and then later on the price you sell at is the profit, the difference between the two. But on the opposite side of things, when a stock takes a plunge, there's a lot of other traders on the other side of that trade. And for our quick learners, our 5-minute segment, the idea that short selling is actually borrowing an equity at a high price, what we consider as a retail investor a frothy or exuberant price level where it's high. And then after it's got that big discount or that price cut, you actually return that equity. And then so the difference between the price that you borrowed it at and then the price that you return it at is your profit, that distance there. So learning all about that, a lot of the same rules that we apply to going long are involved in short selling, except most traders, when they get into the market, they dream of that black swan event where they buy something and it goes straight up like a rocket, NASA style. But we know from our experience that being around for one of those events is highly unlikely, even if you wait patiently. And then making the most of them is even more unlikely. But in terms of short selling, stocks take the elevator down. They go down very, very quick. So if you reverse the equation, it can be very exciting to be in that event when it happens. So we're going to learn that in short selling. And if you go back in our first few episodes, we have a different we have a list of preferred reading, and one of them is actually the book entitled The Art of Short Selling. So that gives you a really good overview on how to assess companies. Fortunately for the simulation aspect of things, we are able to just learn technical analysis. It's almost like every trade that we make is made at market conditions. We don't really know much about the company. We don't really know much about the share structure. And we certainly don't know what's going on. We don't know anything about earnings or contract. So it helps to keep our mind free to concentrate specifically on the chart. So that's what we're going to do today. We're going to learn how to use our key levels and the personalities to now take some negative bets against charts. And then I have some negative ETFs for us to watch at the end of the show.
I'm really looking forward to this. You know, this has been on the table since day one about doing a bit of this. You said it's the most exciting bit. The bit for me, and I know we're only doing simulations, but like you said, there's a lot of opportunity to gain within this. But I guess because what you're doing is taking a chance that stock is going to tumble and you can buy it back at a shorter price, is that your risk is kind of unlimited as well, which I suppose is a bit of where the excitement comes into this. So it's a much riskier strategy, but I've been really looking forward to doing this, giving it a go. For those watching a 5-minute video, hopefully that was a very good quick overview of short selling, the benefits of it as well. If you're on the longer form video, stick around. We're going to do some simulations, hit it live. If you're just on the short video and you want to see some more, just click the next video. You'll see our full 30-minute overview of short selling. Don't forget, of course, check us out on social media. We are on Twitter at BP Financial Pod. Ethan himself, along with his live trading, is at T4A Phoenix. That is T4A PHENUX. Thank you very much. Right, so how are we going to start off our deeper dive on short selling then?
Well, before we get into the simulations, we're going to talk about the advantage of simulating in the short selling realm, is because, like you said, short selling is definitely more risky. There's certain aspects of it that make it more risky, and certain aspects of it that add another tier to, what do you call that? Entry. So there's actually an entry level in account size, and there's also the borrowing that has to take place in order to, there has to be enough long-term investors in a stock to even borrow the stock to make a negative bet. So the cool thing about simulation is we take all that out of the picture. We don't have to worry about we don't have to have the right credit. We don't have to have the right account size. We don't have to worry about, like you said, the actual the risk, because there's exponential risk to short selling, because you can actually owe significantly more than you can handle, versus when you long stock, the equity that you buy is the equity you sell, versus these equities are simply ones that we've never owned. So there is an interest rate that goes along with it. So we take all that out of the picture and we just concentrate on having fun, just like we're playing Mario Brothers.
Absolutely.
You know? So the very first thing we're going to do is we're going to pull up the simulation, and we're going to look at our key levels and see if we can identify personality, and see we're specifically looking for big babies. So we're gonna flip our goggles around and throw out the charts that look like they're strong.
Here we go. So we've got one here loaded up straight away. Bit of growth towards the end of the last day. Bottom line there, just below 60.5.
Yeah, you feel like calling out the key levels at all?
Yeah, so we got, what's that, just below 60.5 at the bottom end, and what's it, 61.6? I'm gonna say 61.7 at the top.
Yep, yeah, that looks great to me. So what would we like to see to grade this as being weak, or maybe a big baby personality?
This first bit here, I'd want to see quite a sharp run straight down towards that 60.5 level. And probably look to see, something, a fair number of sells in that as well. So we're creeping down slowly as we start this one.
So the cool thing about understanding short selling is, even if we weren't looking to short sell, we understand that the red bars, they symbolize other active traders on the other side of each trade.
Yeah.
And they add a degree of volume that works against buying and selling. So it helps us emotionally, it really helps me a lot to picture X amount of traders in front of their screen, looking at the same thing you are. Are they hurting or are they feeling good?
Absolutely.
Short sellers are feeling good. We probably don't want to be in it as long.
Right, this one to me is looking a fairly strong hold in its level chart at the moment, up at its running along its top end. So if you're in agreement, I want to bin it off and move on to the next one.
Yeah, I'm in agreement.
I don't see any baby tantrums going on there.
And that helps us, the randomness of the charts that we look at, because in real time, it helps to appreciate the level of patience that is involved to look for, we're looking for what we want to see. We're not trying to create something.
Absolutely. Absolutely. Another here, so 46.5, maybe not quite there at the top, 46.2 at the bottom coming into the day. A gap down,
Yes.
number of reds going on.
So for me, I like to see that 46.2 that we were looking before, as
Yeah.
long as we were looking for end-to-end candles around an area of interest. So those areas of interest on the bottom, we're still going to be looking for those end-to-end candles as a trigger to make a negative bet.
Absolutely. I see that. Just flips on their way. So end to end candles going down, not up.
Yep.
Like looking in a mirror.
Very good.
And we seem to be sailing straight along the 46.3 line in the middle. So,
Yeah, it seems.
a couple of reds there. Nah.
And things don't always do immediately what you want. They can have a decrease in buyer interest well before they have a short seller interest.
Yeah.
So you kind of see buyers getting fatigued, and then you'll see sellers taking over. But for me, the fun, we were talking about fun in this show as a follow up to last week's, is I like to see the clear plunge red signal. They call it, some other instructors call it the death line.
That is very descriptive. I like it.
Rather than like a slow. So, for interest of example, we could take a quick short position.
We feel here, yeah.
And
So we've hit those, what's that, 4 reds in a row. Not quite end to end, but on the way down. Do you think a little short button press here?
yeah, and the idea is with if we do press the short button, we're gonna go with all our skills that we've learned so far, and we call it a feeler, because all we're doing is dipping our toe in
Yeah.
real quick, seeing if we can make a quick profit, and then we're gonna immediately get right back out.
Here we go. There's that short.
There we
And
go.
is that cover takes me back out again?
Yep,
Cool. There we go.
that's it. So we made
Cha-ching.
our very first short sell there. And then, so we were learning in the past, we would do the exact same thing that we would do as a long, is we would look to eventually manage that trade, take those profits, and then risk off of them if the trade was going really
Yeah.
well. This trade seems to be hovering around that area, not making a bold decision to go lower.
Yeah. Shall we
So
skip
we'll
out of this
probably
one?
just, yeah, we could take our quick win and move on to the
There we
next
go.
next
A
chart.
0.14% profit. Moving on. All about those little
So
gains.
yeah, so we see on the opposite side of volatility that our quick long scalps can really, there it is profitable. You do it a number of times. You pick your positions very wisely. Pay yourself. What we have been talking about, we're using our personalities and our key levels, all of that right now, but we're using it on the opposite side.
So this next one loaded up. We just, what was that, about 29.8 looking back to the previous day for the bottom end, 31.5 at the top. We'll see. We're opening kind of at the top end of that amount as well. I did do, if there's chance, we'll talk about it later, but I did a bit of that scalping, like we said,
Okay.
in previous charts. And sometimes I did it 3 or 4 times in one chart, which were kind of the all tiny little ones, but all added up to a decent little bit of money, which were the most satisfying, shall we say.
Yeah, I appreciate that for sure. Do you want to end this one and we'll keep looking? It seems like it's a little too strong.
It is. We're getting. If I was going for some longs, there'd be some very good charts here, but we're going for the other end. It's not working so well. Oh, here we go. Big number of sales on the opening of this one here. Oh, that's a strong mark down.
Yeah, let's hit the short. See if we can grab something quick, and then we'll
cover that back out. Not quite the way we wanted to go.
And then we'll look for another opportunity. This could very easily be the ability to short it again, even better maybe this time, because what happens is any short sellers that have been involved from the beginning, that little green bar we got caught in, that's called a cover. So those aren't necessarily people that want to own the stock. They are simply buying the stock at a lower price.
Yeah.
So it adds to, like, it's called an artificial short squeeze.
I see it. So they're the people getting out of their shorts. So it's like I said, it's not necessarily an upswinging buyers. It's just people getting out of that point we wanted to get in. And we're not seeing a lot of activity on this one. Not a lot of buys or sells either. So
no, we're not.
In the name of progress, we'll move on.
Yep.
Oh, here we go. There we go.
So we basically won one, lost one. we see how tricky it is.
Absolutely. A big gap down at the open there for this next chart. Oh, a second big red on the way down.
So we could take a small short again, see if we can grab something.
Give it a little go. There we go. That's looking better.
Yep. And then we cover just for the interest of we can put it back in.
And what do you think there? We got 4 big drops there. Do you think we're going to see a fifth?
I would say, let me see here. There's a fair amount of momentum, so I'd say it's 50-50, but I'd like to see it
Shall we move on and see what happens? Yeah, absolutely.
Yeah. There we go.
Here we go. With that, it's got a wick on both ends as well. So which way is it? This is babying out of control, this one.
Yep. Yeah. I feel good just observing at this point.
Yeah.
It's nice that we've been able to see. We're exploring. There's no hurry even in these games. Exploring with the idea to learn. We're not missing out on anything. And we see how that was honestly our best short yet, just because we were able to see that downward momentum.
Absolutely.
If we were to reverse that short, if we were able to reverse that short sell, that's exactly what we'd be looking for as a long, something that goes straight up.
No, you're absolutely right.
Down.
And obviously you can see it on the screen on YouTube for those listening. We got, 1, 2, 3, 4, 5, 7 red, almost end-to-end candles with a big swing of momentum there, which we got in somewhere in the middle of that. And it swung back up again. Number of greens, one very minor, and then red's back on the scene again, though. So I don't know if we're going to start to decrease down, or what I've seen is sometimes they level out and then they just kind of peter on for the next couple of hours at this level.
Right. So if you were going to short sell this again, what level might we be looking at?
20. What's that? So the lower end's at 28 there, isn't it?
Yep. Yeah. So we'd like to see a nice fat bar hit that level, maybe even an end to end around that level. And that would give us so much information because, like we learned in the past, if it tries to make a level, it's like a flag that puts us on notice. It doesn't mean that it won't try to breach that level again in the future. So if we had more in your practice time, anybody who's listening to this, take note of that and realize that uh, each of these charts, just because it was long at one point, doesn't mean it will be along in the future.
Absolutely.
Just because it was a short at one point doesn't mean it will be a short in the future. But at the same time, we look at the clues that the chart is giving us. Try to keep tabs on what the traders might be thinking.
Right. We've just settled into a line here. Not so much activity going on as we head towards midday. Shall we hit one more for the day, see what it shows us as an example?
Actually, I feel like we had some really good examples of quick. We're gonna explore it a little bit more. Um, I'm gonna give you some time on the downtime to try to find
I will go
some
hunting for those
short
charts.
charts, and then we'll exemplify it for the next episode. I'm
Awesome.
because of my personal situation, I'm in a great deal of pain at the moment. Didn't expect it, but we're raw every time learning this. So, as we talked about in the previous video, I was gonna not as the prep for this video for Lee to be able to talk about some of the difficult conditioning that took place for him while he was doing simulations. So he's got some learning to share with
Cool. We're going
us.
to put my learning up on the screen here, are we? Right. Yes. So
Yeah,
we
let's
talked we
do
talked
it.
about this in the run up before. So we've been everyone will have seen last week I put out a learnings episode. So it's been a couple of weeks since me and Ethan spoke to each other, and I've been hitting the charts quite heavily. Here we go. And we've got here on the left side of the screen, number of, a fair chunk of green there and some big greens. I've got nearly a 4% win on one day, a 3% there. I also hit some big reds as well, which really hit me. One here, nearly 5%. And what I did, and I'll show you my chart, my bar graph, is I was doing really well, hit some big wins and jumped my profit up to what is nearly, since we started, got up to 110. So that's a 10% profit on my overall portfolio. And I was riding high. The thing is,
Yeah.
I got a bit lucky. So rather than dipping straight out, I strayed from the rules and I thought, I'll stay in this one bit longer. And I got lucky. But as you said to me before, just because you get lucky on something once, I wish you'd stayed in. If it's outside of the rules, it normally won't stay. And that is evident here because it's like a roller coaster all the way back down. And I tumbled from that 110, so 10% up on my original 100, all the way back down, I think, to 101. So everything I
Okay.
had gained over the last 5-6 weeks of chart gaming, I lost pretty much in 2 trades from going outside the
Yeah.
rules. And what I did was I lost and I thought, it's right, it might go up again. I'll stay in. And it got worse and worse. The charts would have made perfect examples today for charts to short on, is how bad they went. I think one
Oh
of them I lost
man.
$5,000 on it, and it was just like we've said, this is all simulation, it's all play, but it hit me, it really did. But what I did, and I was thinking what you'd say to me if you're watching me doing it, and I thought I know what I did wrong, and I've got to be patient, and I've got to get more discipline to stick within the rules, and I've just got to go for those short ones. And you'll see here as I go to my last page, since I hit that last one wrong, which was at nearly 3% loss there, I've then and again, I go in on probably 1 in every 5 charts that I see. But 1, 2, what have we got? 3, 4, 5, 6, 7, 8, 9, 10, 11. Up until we started
Excellent.
today, 11 in a row that I did well on. And
Yeah.
my 101 is now back up to 104. 400 of that came from now, but I got it back up to 103 in little short scalps. And as we were saying before, I'll probably do exactly the same, and I'll start to experiment a bit too much, and I might dip outside of the rules. But actually, I felt quite good afterwards, and I'm really starting to get the bug for trading and the good feeling of good trades. And like you said, it doesn't matter if it's a 5% or a 0.05%. It's the success and the tick and the green on the chart that's keeping me motivated. So I learned some quite hard lessons over the Christmas period and nearly lost my whole imaginary profit, and I'm starting to build it back up again. But what it's shown me is the rules work. The rules work, and those little consistent gains is the good I'm taking out from what was like a bit of a gut punch on a couple of those trades.
Yeah, you definitely go through it, and it's so much nicer to go through it in simulations. And I like what you said, the rules work. Having rules works. Having rules works. I'll say it again. Having rules works because it's data driven. You know, it's there is aspects of the strategy that give you a definable edge. So I'll just quick ask you, how did you feel? I'm going to ask you two different questions. How
Okay.
did you feel emotionally when you had that few lucky trades?
Really good. When a few lucky ones came in, I felt really good. Like, saw the big jump up in the money, and I was like, "Whoa, this is fantastic!" And I was quite elated from them.
So how did you feel when the trades didn't go your way?
You know, when you have a dream where something goes really bad, and then you wake up and that hits you, you're like, "Oh God, that was just a dream. Thank God that didn't actually happen." I wished I could have had that moment. There was that bit of like, how can I go back? How can I undo this thing that's happened? But I think what I
Right.
tried to do was catch myself before I went on that spiral. But it was that, oh God, how do I undo what I've just done? So that brilliant end, it was the complete opposite end when I had that bad feeling as well. And again, it was looking back retrospectively, it was inevitable it's going to happen. In fact, it's probably more likely it will go wrong from not following the rules than it will go right. So I kind of got lucky to get two good trades out of it before I hit the bad ones.
Yeah, and it's honestly, it's something that every trader struggles with. Most traders will struggle with it their entire trading career, is going outside the rules to try to make a profit. But the best traders will realize that about themselves and realize what you started to realize is, okay, hey, I broke my rules, but this is the way that I make consistent reparations.
That's
Um,
exactly it. And because if you look at it, if you were just to look since I basically had a word for myself and told myself to get back in on what I've been taught, it looks fantastic. If you look at it in isolation, you'd be like, man, he is on it. But it comes
yeah, you'd be
from
like,
that terrible one
holy crap,
beforehand.
right? You just see green, 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 green,
I say, but
green, and
what
one
precedes it as
loss.
some horrible reds there.
Yeah,
But that's where I got back
yeah,
in the rules again.
but it's learning, and that's why I like simulations so much. Is you really have to get kicked in the face to appreciate this game. Um, and you're gonna get kicked in the face one way or the other. You're gonna get kicked in the face with real money, or you're gonna get kicked in the face with fake money. And if you take getting kicked in the face with fake money seriously, you can really make some psychological progress. Because I've played chart game, and this is no, this isn't a real big fish story. This is for real because of my situation. I've played it 17 hours a day, 20 hours a day, while listening to music. You know, I've had up to a few 100,000 when you start with 200,000. I've went all the way down to about 1,800. I've built it all the way back up again. I've lost it all again. I've built it all the way back up again. I've lost it all again. I've built it all the way up. I mean, I keep going. I've lost it all until each time I start losing less, and my climb back
Yeah.
feels better and better and better. Just like what you're seeing, those reparations, man, they feel great because you're seeing the rules really work to
Yeah.
get back.
And I've managed the bit I'm taking my pride in at the moment. I don't know if it's the best measure to be using or not, but my win rate is currently sitting at 72%. And my aim is to keep that above 70%. And it's went down to about 67, 68, and it shot back up on that last run. And I kind of, in my head, as long as I can keep it above that and I've got the discipline, however big or small it is, a win is a win. That's what I'm kind of trying to focus myself on. And there's something, it's stuck in my head, something I saw, I don't know if I spoke to you about it, but I saw it on your Twitter. Again, for those listening and watching, at T4APHENUX, you put up a couple of stocks you were looking at. Someone else recommended one to you and said, why aren't you watching this? And your response back was you just said, it's not within my rules. And that's just stuck in my head. And whilst, I know a fraction of what your rules are right now, I don't know the whole thing, how you put it together. That bit about being disciplined and not straying away from the rules to something that looks shiny but might not be quite what it seems to be. That discipline, as is evident from last week, I'm trying to keep building in my head. But what I love that you're doing and what we're doing here for everyone is all that, like you said, those 17-hour, 20-hour days, the last 4.5 years you've been doing this, you're trying to pour all that knowledge now out for people to benefit from those lessons, because they are, to go down to 1800 and build it up again, that is some hard lessons being learnt there, my friend.
Very, very, very hard. And like I said, when you prep for the shows, it's not totally worked out of my system. I have to keep in front of me constantly because of my cash account now. I have to keep in front of me. It only takes one bad trade to wipe you out completely. Like one bad day, but no one trade. This Timothy Sykes said this, no one trade will make you rich. So with the idea of everything we've talked about in the show, our stock to watch this week is actually TZA. And they take a negative. They still go up, but it's a negative ETF. So I traded that today and yesterday. Some very good trades. I posted the charts for you guys to see. So over the next week, it's a hard one to trade. So we're just going to watch it for educational reasons. But TZA is a ETF that is based on shorting the small and micro cap aspects of the overall financial market. So that'll be the fun thing to watch for the next week.
Excellent. I will add that to my list on my apps.
Nice.
Hope everyone else there does as well. As always, we thank everyone for listening and watching, throwing support for the show. We really, really appreciate it. Appreciate support on social media as well at BP Financial Pod. Ethan again, T4APHENUX. You can see his trading tips going on there. I watch him avidly. I think you should as well. Hit the subscribe button, leave us a comment. Appreciate everything from everyone. Everyone out there, stay safe. Have a great new year, and we will speak to you again in 2021.
See you guys.
He's been Ethan Cope. I've been Lee Kemp. We've been Black Phoenix Financial Podcast.